Hello, this video will cover how to complete the quick study for Chapter 3, Part 1. Hopefully you are completing the items in order. Chapter 3, Part 1, there is an article, How Do You Eat an Elephant? Go ahead and click on that link, and then you will click on Next, and then hopefully you'll have read the chapter. Once you've read the chapter, then you should complete the interactive presentation. Now, once you've done the interactive presentation, I highly recommend that you go through and do the lecture, which is a review of adjusting journal entry summary. There is a video, and solutions will appear for the problem. So again, even though you're going to do the quick study, you need to make sure that you're doing the notes. You can download the notes by printing the link here to the note handout, and then you just play the video and you should be able to follow along, and it will cover the 4 basic types of adjusting journal entries we will be using in this chapter. And once you've done that, on the back of the handout, effective I guess September 5th, the solutions will be available for the practice problems you had. Then you're ready to begin your self-enrollment for the gap assignment items that you will need to do. You will select a group to self-enroll. This is a little quick video of how to enroll in groups in general. You can go ahead and go through that process. It's under people, but look at the video if you're having trouble, or not trouble, but you need assistance in how to enroll into a group, and then you should be able to complete that in accordance with the due date. So then we go next. Now here goes the quick study practice, and you want to launch this, but you should only do this after you've completed your interactive presentation Connect assignment. So once it launches, you will see I think there's 8 or 9, maybe 10 questions here. The quick study is worth 10 points. It's due on the 6th at 11:59 p.m. So what you're going to do is, after you've completed the interactive presentation, after going back to Canvas, you should be able to select it and it'll launch. And you'll notice there you have the feature to check my work. We won't select submit until we've completed all the problems. It says prepare the journal entries to reflect expiration of insurance and correctly report the balance of supplies account and the supplies expense account as of December 31st. I would go ahead and pause this video at this point in time if you do not have a piece of scratch paper. I highly recommend you use T accounts to figure out the amounts of the adjusting journal entries. This exercise is very similar to the review of the adjusting journal entries we just did in the item for your list of items to do for reading Chapter 3, Part 1. So first of all, we're going to see the dates. Record journal entries to reflect expiration date of insurance as of December 31st. So we're going to record this entry as of 12/31 at the end of the period before we prepare the financial statements. Now looking at the account balances, it says on July 1st, Lopez paid $1,500 for a 6-month of insurance coverage. No adjusting entries have been made to prepaid insurance, and it's now December 31st. So $1,500 was paid in advance for 6 months. So you take whatever amount you have, divide it by the number of months. My number is 1,500 divided by 6, which will give me $250 per month. July 1st through December 31st includes 6 months, so 6 times 250, it actually ends up being $1,500. So that's the amount of insurance that has expired. So I'm going to recognize the expense. I'm going to debit insurance expense for the full 6 months. And then I'm going to credit the prepaid expense because originally it was put into that account as an asset to provide a future economic benefit of coverage for the next 6 months. So that'll be $1,500, 6 times 250, debit, and $1,500 credit. And then I will record the entry. And then it says record the supplies used during the year. Letter B, Zim Company had a supply account. Balance was $5,600 at the beginning of the year, January 1. During the year, they made purchases. So what they started with, $5,600 plus what they bought, $2,300. That would be, what, $7,900 worth of supplies available to use. And then as of December 31st, they take an inventory, count what they have on hand, and they figure out, okay, we have currently $950 available. So what we'll do is we'll take the $7,900 and we will subtract the amount that we have available, and that way we will back into the amount that was used. So based on my numbers, it will be $6,950. That'll represent the amount that was used. So that's what I'm going to expense, $6,950. And I'm going to reduce my asset account. So I will debit supplies expense for the amount used. And I will credit supplies the asset for the amount that we use as well. But that's an asset account, so we're going to go ahead and credit an asset, so we're decreasing it. And that will be my adjusting journal entry, again, on December 31st, before we issue the financial statements. Record the entries, then view, and this is what your answer to the first one should be. Check my work just before I submit. It says answer is not complete. So let's see. What am I missing? Oh, I transposed my numbers here. So let me return to the question. And that should be, no, it should be a 5, not a 6. So let me fix it. And then I should be ready. I can check my work again, but I know it's correct. And then submit. And I'm ready to move on to the next problem. And then if you want, you can review your results. And again, you have unlimited attempts, but we're trying to at least get a 80% or better. Alright, so go on to the next one, item 2. Here we are given some more information regarding some adjustments. Bargain purchase, $35,000 of equipment. The equipment is expected to last 5 years and is worth $5,000 at the end of time. Now looking at the problem, it's asking us to prepare the adjusting entries. And then it says prepare the entries to record 1 year's depreciation expense of $6,000. So they are telling us the amount. So all we got to do is debit the correct account and credit the correct account. And again, hopefully you did the exercise for the Chapter 3 notes. This is a very similar problem. So all you're going to do is, let's see, let me scroll down, record the depreciation. We're going to debit depreciation expense. And then the dollar amount for the year was $6,000. And then we're going to credit the contra asset account that was in your reading. So make sure you read about that contra asset account. Accumulated depreciation, normal balance of accumulated depreciation. It is credit because it offsets another asset account. And this will be our adjusting journal entry for question A, record the entry, and then question 2 says record depreciation adjustment on land, if any. Because the land has an indefinite life, it's expected to last indefinitely, there is no depreciation. So what we'll do is we'll do no entry required. So let's just type in no journal entry required, and we're done. And we will check our work. answer is complete and correct. And we're ready to move on to the next question. So score your answer. Score now. Question 3. And again, if you're not quite sure what to do or how to do it, and you don't remember from your notes, you can always select references, or ebook. It will tell you exactly where it is in the chapter, so it'll take you back to the reading so you can read up on it, and hopefully that'll help you with the process. Now with the item 3, and this one's kind of tricky in terms of how or where they want the information, but let's go ahead and do it. At year-end salary expense, whatever amount you have has been incurred. That means it's happened, but they haven't paid it just yet to the employee. So first thing they ask is determine what the current account balance equals. Well, at the beginning of the year, prior to any adjustments, the accrual will actually be, it'll be 0. Excuse that noise in the background. I hear beeping from the kitchen. No alarm. Okay, 0 would be determine the current account balance. Determine what the current balance should equal. Well, it should be $25,500 based on the amount. So we're going to type that in. And you'll notice that the T accounts are actually being filled in for you. So that's where I was saying the scratch paper. Now this is salaries payable. It started off at 0. Is it a debit or credit balance? Well, it's a liability, so normal balance is credit. So we're going to type in credit, and it'll automatically switch it to the credit side. Then it goes on to ask you about the adjusting entry. Record the adjusting entry that you'll need. You're going to debit the salaries expense for the amount of expense that has happened, that has incurred, and then you're going to credit salaries payable for the amount that we owe our employees. And I don't know if you can see it, but scroll down. It's payable. And that'll be our debit and credit. Let's punch in our dollar amounts. Dollar amounts, 2,500. No, 25,500, 25,500, and then that should be what we need. And let's see. We'll go ahead and we'll do check my work, so you can see the first item, and you see how it automatically filled in the credit to salaries payable to show you the T account balances, and the final balance would be 25,500 credit, and that will agree to what the balance is supposed to be. And you will use the same process to complete the rest. So this will conclude this video. If you have any further questions on how to adjust, make sure you review your chapter notes or the examples that are in the first part of chapter 3. And remember, today is a great day to learn accounting.